Good afternoon, good evening, everyone. From Princeton, New Jersey, I'm Rob Sloan. I'm Research Director at WSJ Pro, the professional arm of the Wall Street Journal. Hope you're all enjoying this year's virtual RSA event. And while it's a shame we don't all get to meet together in San Francisco, it does mean that we get to enjoy all of the fantastic content from the comfort of our homes. This session is picking winners, how the pandemic changed cybersecurity investing. And for the next 30 minutes or so, we're going to be analyzing how cybersecurity investors responded to the pandemic, what has changed in the investment landscape since, and what's top of mind for investors and entrepreneurs in the Bay Area and beyond. We'll be guided through the topic by three experts, so please join me in welcoming Dino Boukouris, Managing Director at Momentum Cyber, Dr. Chenxi Wang, Founder and General Partner at Rain Capital, and Saam Motamedi, General Partner at Greylock Partners. Please remember, if you have any questions, you can ask them via the chat function and the panelists will respond in real time. Please do try and keep questions short and to the point so we can get through as many of those as possible. We have a lot to get through, so I'm going to put my first question to Saam to get us started. Saam, take us back to early 2020, just over a year ago. Were investors better prepared for the pandemic than other industries? And had individual firms thought about how a pandemic might affect business?
Thanks, Rob, and it's a pleasure to be here on this panel today. So for context, at Greylock, we're a small Silicon Valley-based venture capital firm. We invest primarily in consumer and enterprise software. And so if you think about the companies we get involved with, they range from one person and an idea to a pre-IPO stage company with a couple thousand employees. And so if you rewind the clock back to February, March 2020, I think the short answer to your question, Rob, is we weren't specifically like sitting inside Greylock thinking about a global pandemic and preparing for how that would impact the way we would work at Greylock or how our companies would operate and scale their businesses. That said, like when we invest in these companies, these journeys are inherently volatile. And part of it is, how do you build robustness and anti-fragility into the company so that you can react to an uncertain and unpredictable future? And so as part of that, one thing we do when we invest in a company is we make sure to capitalize the company, not just to the next set of milestones, but so that has a period of buffer in case anything was to happen. Another thing that I think we're thankful a lot of our companies had been doing pre-pandemic is experimenting with different modalities of work, whether that was 1 or 2 days a week, engineers could work from home, or some companies that had fully distributed teams, or some companies in the middle that had an HQ and satellite offices. And so some of the paradigms that went from optional to necessity post-pandemic, our companies were already used to, right? And so if I think about like the transition post-pandemic that our companies went through, I think of it on 3 dimensions. The first dimension is health and safety of the workforce. And so, what we saw happen right away, and a lot of the companies I'm personally involved with and we're involved with at Greylock are Bay Area based. And the Bay Area was on the early side of locking down relative to other major US cities. We saw, a lot of offices shut down and people pretty seamlessly transitioned to working from home, especially in our software-oriented companies. Then the second piece is, okay, how do you have continuity of business service and products for your end customers? And again, there, particularly for more modern cloud-based SaaS companies, the transition was pretty seamless. And then I think the last piece, and where we spent a lot of time, and I'm sure we're going to talk about as a group, is once you have the defense in place, how do you play offense? And so a number of our companies began to think through, how does the product and value proposition stay relevant, become more relevant in a post-pandemic world? And how do you adjust to building and scaling and selling software kind of post-pandemic? And that's where we spent a lot of our energy on. But we adapted quickly. It wasn't something we had come into 2020 thinking about or planning for.
So fortunately, some of those strengths that you look for in businesses just play it out very, very nicely in this scenario. Chenxi, you were saying just before we started recording about how sort of carefree we all were at RSA last year. We weren't thinking about lockdowns or how this pandemic was going to affect us. Then a few weeks later, the lockdowns are there. I imagine it's quite stressful for you with all of the unknowns. What were you thinking about how you and your firm would respond?
Yes, thank you for that, and pleasure to be here as well. I think it was similar for our firm as what Saam said, right? So we weren't necessarily preparing for a global pandemic, but just the fact that we are in software industry, my companies mostly are SaaS based offerings, and the switching to work from home wasn't a big deal, wasn't a big switch for these companies. And their business model was, many of the business models were inherently resilient against a pandemic sort of world, right? So I would say overall, we weren't impacted that much, but we did in the beginning of the pandemic, like March, April, I think everybody saw a slowdown in business, right? And because customers are suddenly switching to work from home and some of the strategic projects are being postponed, all the IT and security teams have to now pay attention to how to secure work from home. So they are I would say places where you have to quickly switch your strategy, how to accommodate what your customers want. But beyond that, I think I saw a very resilient set of companies that came out of the pandemic. Well, I guess we're not completely out yet, right? But 2020 actually, I was super impressed at how resilient everybody was. The companies that we invested in came out of 2020 very strong. And in fact, 5 of my companies raised Series B in Q1 this year based on strong performance of 2020. So I, for one, was pleasantly surprised.
Well, that's great. So I'm going to come to you, Dino, now to talk about some of those numbers and how the industry performed in general. I'm assuming a lot of the audience might be familiar with Momentum Cyber from the data that they put out regularly and the Cyberscape, which I've loved following for years as those logos have got smaller and smaller on the slide. Tell us a little bit about what it looked like in 2020. I know quarter 1 was really good. Quarter 2, there's all these unknowns. Funding dries up. And then what happens? Tell us, what do we need to know as the year went on and as this year's progressed?
Yeah, sure, and likewise, great to be here with an excellent panel. I mean, I think a lot of the comments are in line with what Saam and Chenxi were saying. What we saw really was, yes, Q1 was a strong quarter. I would say in March, of course, is when things just came to a screeching halt. At least from our perspective, it was more of like a period of pause and uncertainty. So there was that defensive mindset, almost like a survival mindset that a lot of investors and companies went into. And yes, there were, I'd say, a handful of deals that at least we were aware of that were right at the point where they wanted to close. So maybe like the 10-yard line, to use a football analogy here. Those deals, for the most part, either got across the goal line as papered, or there were some retrades that just happened to be, in my opinion, just really unluckily timed at that point. But right after April, I'd say that uncertainty started to dissipate. People went into more, okay, the shock is worn off. Let's go into action mode. Let's get our companies, working from home. Let's get our business processes up and running. Business continuity was back. Q2 was a bit slower, I think, across the board. There just wasn't, because the deals that obviously would be announced in Q2, they would have to be in full swing in March and April timeframe. That wasn't really the case. Deals that we were involved in, for example, none of them actually went away. They ended up just kind of getting stretched and getting a little bit slow rolled. So meetings were happening. I'd say maybe more meetings than we would have expected were happening. So lots of activity, even though it didn't necessarily translate into accomplishment in that second quarter. Q3, we actually saw, a resurgence. The tides really felt like they were shifting. I mean, our own business, we started seeing more companies that were thinking about going out and raising the next round of capital, thinking about potential M&A opportunities. So, Q3, things started to feel like we were already seeing the light at the end of the tunnel, even though, we're still just 90 days, 120 days into the pandemic. Q4, at least for us, we were seeing that market and activity in full swing. I mean, there's record numbers that ended up getting posted from a financing perspective. We made more investments in cybersecurity in 2020 than we did in 2019. is actually about a 28% increase. We have about 540 investments that we tracked in the cybersecurity market versus 420 the year before. And then if you look at the money that went into the space, it was almost $11 billion that went into the market. And I think the year before we did about 9. So from a kind of cash and deal velocity in cybersecurity in particular, we were actually quite pleasantly surprised.
I think I'm right in saying it wasn't just cybersecurity, right? That the whole of VC funding across most industries bounced right back and had fantastic years.
Yeah, I think overall you're right. Q4 was probably that determining factor for the industries that had a really strong Q4. It was able to kind of push them across that line. Otherwise, maybe, if they weren't better than 2019, they were just, approaching that line. So I think, we saw that recovery just like we did in the public markets. I mean, I think the private markets really did follow the public markets quite closely as, the markets were red hot kind of going into the end of last year. I mean, we saw VC funding flowing too.
Saam, Chenxi, you're seeing the data of a strong recovery in Q3. Is that giving you confidence to go out and do more deals yourself? Or is every investor sort of approaching this on a personal risk tolerance level? I don't think we're through the worst of this yet. How are you approaching this? Chenxi, maybe I could put that to you.
I don't think I'm necessarily approaching it differently because there was a pandemic or was a strong year. I'm approaching it just the same I was before. Rigorous, looking at good companies, solving compelling problems with good teams and things that I could help with, right? So those are, at the summary, the criteria that I use to evaluate companies. And I do the same today. And I would say that one thing has changed is I'm much more likely to fund a company without meeting the founders in person now. And that has been a change.
And that's something I do want to get to later. Just a reminder to everyone in the audience, don't forget, panelists will be answering your questions in real time. So if you have anything you want to ask them, write it right there in the chat box, hit submit, and we'll get to it. Saam, what challenges does a working from home environment bring for you? So for me personally, it means I have 3 kids running around. I'm trying to do homeschooling at the same time as work for the journal. It's just distracting. I don't know if you have family there or other distractions, but just the process of investing from home without your workmates, teammates, and data around you on tap. Is it more difficult?
Yeah, it's a great question. And I kind of want to second something Chenxi just said, which is on the venture side, at some level, the job's unchanged, right? We're looking for like the intersection of exceptional people with exceptional market opportunities. And, now we're in the virtual office on Zoom. We're not sitting in our in-person office, but like the fundamental mechanic is actually very similar. And then I think, Rob, to your question on what's difficult, I'll start with what's not difficult. So one of the nice things about the venture business is, and especially the way we work at Greylock, we've always worked in a somewhat distributed way, which is to say that, there's 8 or 9 of us. We get together on Mondays. We talk about opportunities, both at a concrete company level and at a market level. We make investment decisions and we spend time together in person. But then, Tuesday through Friday, we're split across multiple offices. Every partner has a different portfolio. They're in board meetings. And so it was not uncommon at all for me to go an entire week, module Monday and not see my partners. And so to that degree, minus the fact that now Mondays are, an 8-hour Zoom meeting, a lot is unchanged in the way that we work both internally and with companies. I think to Chenxi's point, there are some nice positive kind of things that have happened, right? One is at some level, the complexity of investing in an entrepreneur sitting in New York City, in Chicago, in Tel Aviv is no harder than investing in someone in San Francisco. And so it's leveled the playing field from a geographic perspective. It allows us to see a new set of opportunities and a more diverse set of opportunities. So I'd say that's quite exciting. The other thing I'd add is like the pandemic just created a lot of opportunity. It created a lot of pain for companies and the way they worked. And that also led to a lot of opportunities for new companies. So I think at Greylock, like we would say we haven't seen the rate of innovation and the rate of new company creation that we've seen over the last 9 to 12 months, right? And I think Satya Nadella had this famous quote like early on in the pandemic when he said several years of digital transformation has gotten compressed into several months. We absolutely saw that play out. And I think you have all these enterprises that had these projects on the security side, but on the transformation, kind of in terms of transformation more generally, that they were thinking of as like multi-year projects, multi-quarter projects. And now it's existential, right? Like if you wanted to transform the way you interact with your end customers and go from a retail presence to a digital presence, you've got to do it right away. And you look to new vendors and innovative technology. So that's kind of one thing pulling on the demand side. And then on the supply side, look, you had a cohort of companies go public last year in the technology space. Early employees at those companies felt like it was the right time to transition out. Those early employees often become the founders of the next set of companies. And so you have like a lot of supply of new entrepreneurs, and then those things intersect and create opportunities for us. And so while we've like shifted to working from home, and Rob, similar to you, like it's complex with families and managing kind of work and home, it's actually been a really exciting time. And for example, I think we have never paced as fast on new investments as we have over the last 12 months because of how attractive the opportunity set is.
I totally agree. I would say that other than, the beginning of Q2 slowdown, I saw the number of meetings that I took as pitch meetings actually increased the later part of 2020 versus 2019. And that was a surprise to me. Sitting in March, thinking what's going to happen the rest of the year, but it was completely a different story. And the rate of innovation is unheard of or unseen in previous years. And I also sit on the board of a public company where the rate of transformation the public company is looking at also has accelerated because the requirement of having to adopt a different operating model. And that really changed the way we look at entrepreneurship and also investment. So I'm very happy with the outcome, not happy about the pandemic, obviously, but happy with how resilient the industry is, how resilient the community is. So that's been a great experience.
And does that extend beyond the US? Is that the same in Israel, in the UK? Are you seeing that innovation everywhere?
Israel is going crazy. I mean, they just had today a $26 million seed round of a new company, which is probably the largest in cybersecurity, right? And we picked up a company in India. I've never met the founders in person, and this is enabled or accelerated by the need to do business remotely.
Well, let's come back to your point then about meeting founders remotely, not being able to press the flesh, not being able to sit and look someone in the eye over an office desk or a lunch table. How challenging is that? You're about to invest money with someone that you haven't met. Is that scary the first time you do it? Chenxi, maybe I can ask you that first.
So I actually already did it before the pandemic. It's funny because Sam said, "Oh, Greylock, we're a small fund. If you're small, I'm tiny." So from where I sit, I don't have the necessary budget to travel around the world to meet everyone. So we meet whenever we can. We meet a lot of folks during RSA, for instance, during Black Hat. But on a normal basis, I take meetings here in the Bay Area, and I also do a lot of Zoom meetings to begin with. And I think what happened during the pandemic is that we would do a lot more Zoom meetings. The scale of founders that I was able to meet around the world has really increased. And that's the change. And I don't see it changing going forward. And I will continue to meet folks online in addition to in person whenever it's possible. But online will become my primary method, I think, of talking to entrepreneurs.
Dino, similar story for you?
Yeah, I would say similar. I mean, from our perspective, I would say when the pandemic kind of first was really making waves, it was a bit nerve-wracking, mainly because we just weren't sure. I mean, you're looking at the infection curves in the various countries. We're starting to go into lockdown. it wasn't really clear to us kind of how long would this last and how would this change things. But I would say within a couple of weeks, we put out a special report by the end of March that really our prediction was, no pun intended, that cybersecurity was going to be virus resistant. We were looking at the trends of people embracing working from home. We saw the trends of increased endpoints that were being deployed that needed to be protected, people that needed to have, secure connectivity, which, yes, there was probably an initial reaction, like an influx of, let's say, VPN technologies and some of these legacy solutions just to get people connected. But we saw the writing on the wall that, digital transformation was going to be forced to accelerate. Instead of VPNs, people are going to move towards, some kind of secure connectivity, SASE type solution like the Zscalers and iBosses and Catos of the world. So we kind of saw some of these trends that we thought were just going to accelerate, and fortunately they did. And I would say, fortunately, most of the cybersecurity companies that we spoke with, they saw tailwinds after Q2 was unpredictable. Of course, if you had a lot of customers in the travel industry or, casino industry, that, you might have seen a higher than expected churn. But for the most part, the companies that we were working with, they saw a nice boost. Even of their projections. After about halfway through the year, they started upward revising their numbers, which was a pleasant surprise. From our perspective as a firm, we made the decision even before California made the official lockdown that we gave everyone the option to basically work remotely, basically protect yourselves, your health, and from our perspective, we really didn't skip a beat. We had one of the best years. The last 12 months was a record 12 months for us. We had record, revenue growth. I think I was chatting with you, Rob, the other day. We saw between December and January, and for a team of our size of about 12, 13 people, we closed 6 transactions in a period of 60 days. So that was the highest velocity we have seen since we've launched the firm. So very similar to the stories that Sam and Chenxi were saying, uncertainty followed by just a boom in activity.
So let's sort of optimistically say that in 3 months, the entirety of the globe is vaccinated. The virus is gone. Can you see yourself changing the way you work now? Will you all go back to offices? Will you continue meeting remotely? Or will you go back to some of your old habits of flying around the world and meeting people and getting to know people in person? What's going to stick and what's going to change? Dino, I'll stay with you for that, if I may.
Sure. I think the honest answer is to be determined. I personally believe that we'll be living in a hybrid environment where the learnings and, in my opinion, the productivity and efficiency gains that you can garner from adopting a mentality of, some kind of a hybrid model or working from home. I'd say my meetings increased probably 2x what I was doing in 2019, mainly because there wasn't too much of that in between time, the water cooler talk, which I believe there's value from that perspective, building rapport, teamwork, culture. There's certain elements that you just can't get over a Zoom meeting. But from the productivity side of the house, I think we've never been more productive as a firm. I think if properly balanced, you can improve people's work-life balance, which I know is surprising for an investment advisory, investment banking firm to say that. I truly believe that this has been a blessing in disguise. I think in-person meetings are going to still be critically important. And I think I don't know the right way of phrasing this, but the impact of saying, you know what, I'm going to hop on a plane and I'm going to fly there to meet you in person. To me, it has more meaning nowadays. And even 12 months from now, I believe people will naturally feel more comfortable doing Zoom sessions. But absolutely, when it comes to, a big client, a big meeting or something that's, super critical, I'll absolutely be the first one to get on a plane. But do I think the days of flying somewhere for a 1-hour board meeting or a 2-hour board meeting and then flying across the country to come back home, I'd like to believe some of that, which I'm going to call inefficiency. You can probably tell which way I'm biased, but I'd like to believe some of that may be kind of, dispensed with. So,
Sam, for you?
Yeah, I'd second a lot of what Dino said. I think I'd start with what he started with, which is it is TBD, and we'll see exactly kind of how the world plays out over the next few months. I think some things will snap back. right? I think the value of spending time in person, particularly around really high value, high importance interactions, it's very hard to replicate that over Zoom, right? And so I think that is going to snap back. I also think in dimensions where showing investment is a form of differentiation. For example, sales would be a great example. Like if I fly to your office and the other, vendor or the other partner or whoever is just communicating over video, it could become a relative advantage. So I think some of those dynamics are going to play in. But that said, I think, I do think a lot of things are going to stay digital. So I think of it as like, for the way we do our work, I think if we're just meeting, you're an entrepreneur, we're meeting you for the first time, it's probably more convenient for you and for us if we meet over Zoom. And so I think that's definitely going to stay. I think if we're considering working together and, and we're going to invest in your company and you're going to invite us as partners and we're going to sign up for a 10-year journey, I'm highly confident we're going to end up spending time in person when possible, right? And so I think that's one way to look at it. The other way I look at it is, where are relationships where you already have existing high trust? And then where do you need to build high trust? I think to Dino's point around like water cooler, talk, those things are very useful for building trust. And so I look at it like there's companies I've been on the board on for many years now. And to be honest, like the CEO and we haven't lost a step digitally because there's such an existing body of relationship and trust that we can have super direct conversations on Zoom and it's no problem. It's no different than if we were in the same conference room. I think on the other hand, like, if I was to invest in a new company tomorrow, first time working with the CEO, it's very likely that I'll want to spend some meaningful time in person, at least in the beginning, so we can build that foundation of trust, shared vulnerability that expands beyond just work to also personal. And then I think once that it's in place, again, it's going to be much more efficient for a bunch of stuff to default to Zoom. But I do think in person will play a role for trust building in particular.
And beyond Zoom and Slack, have you seen other applications that have been useful in maintaining relationships, either in your firm or with the firms that you invest in?
I'm happy to start. We use a tool at Greylock called Remotion, which, caveat, we're also investors in, but, you could think of it as a much lighter weight approach to interact with folks over video. So instead of like, Rob needing to send you a Zoom link and scheduling a time to catch up, it has a notion of presence and status. So I can see, hey, you're online. I can tap on your face. You get a quick ping. Hey, if you're around, you want to chat with Saam. It's a great way to catch up for 2 minutes and like replicate some of that more serendipitous interaction. So that's one thing we use. Some of the companies that we're investors in use different tools around like digital workspaces, virtual whiteboarding applications. Like I have seen a lot of anecdotal use of that, but we use less of that at Greylock.
Dino, anything you've seen that's been useful?
Yeah, I would say similar answer to some. I mean, I certainly come across some, tools when on one-off meetings with entrepreneurs. But as far as what we use internally as a firm, I would say we've kind of stuck to the basics. Obviously, more use of things like Zoom and Teams and those types of video chatting, but we haven't really found a need to innovate from a true kind of tool. I mean, we're already very much cloud-centric, cloud-first. I mean, we don't have any local servers at Momentum. I mean, it's all strictly a kind of a cloud-first culture. All of our, endpoint, our security tools all have, cloud management console. So for us, I mean, it was really pretty seamless for us to make the move here.
So I use a tool called Toucan, which is a social video platform. Probably the most accurate description is, so it facilitates social interaction amongst folks that within the platform, and it does in a way very organic. You don't have to like put folks in tables or breakout rooms, and you can just go from one group to another, very much like you're at a cocktail party. And I use this for my, I have a social networking group that I manage, and I use this for my meetups, and it's working out really well. I think people are just more comfortable with discussing issues and having just conversations online, and that will continue.
I'll stick with you if I may, Chenxi. Have you seen entrepreneurs respond to this new normal? Are there cybersecurity startups emerging who are focused on solving issues that we didn't have 18 months ago, that are more focused on remote working solutions? Has that started to come about yet?
I wouldn't say any that is specifically focused on remote working, because I think that's a shallow kind of initiative. What I have seen is it's motivated by the fundamental need for digital transformation and fundamental need to really transitioning from an archaic infrastructure to modern infrastructure, and security solutions that cater to that. Things like dynamic network infrastructure or edge computing, securing edge computing. Those are initiatives that I really like, but it's not necessarily for remote working per se, but it is accelerated by remote working. That, I would say, is what security companies are doing today.
We have about 7-8 minutes left and still a few questions to get through. I just want to remind the audience, if you have questions, now's the time. Pop them in that chat box, hit submit, and we'll get to them. Dino, you mentioned earlier you completed 6 deals in 60 days. Is that right? What were the complications? Would you have been able to do that a year earlier? Was it actually speeded up by the fact you couldn't get in person to these companies? What were the complications?
Yeah, it's a great question. So I do believe that the ability to have kind of back-to-back, Zoom sessions and to frankly squeeze in more meetings and just create more time was helpful. Typically, we would, if I had to fly out across the country in order to have a 2-day diligence session and then fly back, that usually takes me offline for probably a solid 4 days, right? Whereas now, we had, 5-hour diligence sessions in the morning and then a 3-hour diligence session in that same afternoon. So I do believe, had we been in a typical kind of work from office environment and face-to-face environment, well, I think 2 things would have happened. One, probably wouldn't have had 6 deals compressed to that short of a time frame, because really the reason that happened is everyone kind of went to sleep in Q2, Q3 they came back and said, we really, the markets are great, let's get deals done. Q4, Q1 of this year is when all of that activity culminated in transactions. So the time was compressed, but fortunately, because we're working from home, I think it was a bit easier to pull that off than it normally would have been.
And Saam, I know you closed an investment in a Tel Aviv-based company, I think back last October. Was that sort of business as usual or very different from usual? How did that work out?
Yeah, it's an interesting one. So we led the Series A. We co-led the Series A in a company called Apiro, which is based in Tel Aviv. They're building a code risk platform to bring context to developer security and application security teams. It's Chenxi, I think earlier mentioned before the pandemic, you had closed investments over video, and so actually Apiro was a story like that for us, where we actually led the seed round in the company in 2019. And the entrepreneurs had previously built a business called Orato that was an early UEBA player Microsoft acquired. So they were well known to us and well known to people in our network. We actually closed the investment entirely over Zoom. This was summer 2019. And so in that case, we had the benefit of getting to work with them for a year and just see the rate at which they were building product and customers were adopting. And so we kind of doubled down and led a very large Series A kind of during the pandemic. But it wasn't made more complex by the pandemic.
So we've got about 5 minutes left, and I want to ask each of you the same question. So looking forward, I want to get your final thoughts on what you're going to be looking for the rest of 2021. Where are the next cyber unicorns going to be focused? What's hot over the next few months? Chenxi, maybe I can come to you first.
Sure. So we continue to see a great momentum in cloud security. We have a few investments in different aspects of cloud security, but I think with the culmination of modern infrastructure and policy as code is a trend that I'm watching very closely and looking at how to build really security pipeline, not just security products, but security pipeline from design to remediation and back in completely automated fashion. I'm looking for companies that will plug into the pipeline stage and really transform the business of security.
And is that all across the world, anywhere in particular? Any markets that you think are about to explode?
US is definitely in terms of adoption, is the market. And if you're looking at innovation, it's Israel and US. And one thing that this year has taught us is we can do business unencumbered by physical facilities. So I'm looking forward to continuing this model going forward.
Dino, what about you? What are you getting excited about for the rest of the year? Where are you looking for new investments?
Yeah, I mean, I would say I fully agree with Chenxi and the area she mentioned. I would say an extension kind of cloud. I would say the cloud connectivity, zero trust network access. I think there's room for, if we're talking about more unicorns in that space. So we expect to see more and more companies that continue to apply in the market. Right now, it's kind of a Zscaler from a public company perspective that's really winning that market. I know Palo Alto has a solution just based on a couple acquisitions they made, but we expect to see more activity, the iBosses, Perimeter 81s, and others of the world. So, from a unicorn watch, I would say that's one area we're keeping our eyes on. Another one, which is not kind of the most glamorous, I would say, when you think about cybersecurity from a technical perspective, but security services, still the top area of investment. Maybe not so much for the earlier stage investors that are looking for the most, innovative capabilities and technologies, but it's an area where, security tools and kind of consolidating down your security architectures and your security stack at the organization is increasing in importance. Shortage of security talent is not getting any better. There's the data exhaust problem that we're trying to make more sense out of more data. So a lot of people are turning more and more to professional services firm, managed services firms, red teaming, blue teaming, purple teaming, pen testing firms. So we actually expect to see funding to continue to flow into the security services space, especially in the private equity front. I'd say it's one of the top areas that we're always pinged on is the private equity folks seem to love the security services market. And we think it's a huge opportunity there as well.
And Saam, last word to you. What's your hot tips?
I mean, those were a lot of good areas covered by both Dino and Chenxi. And I'd second what Chenxi said just around like the opportunity set. It's interesting, Jerome Powell, like the chair of the Fed, was on 60 Minutes yesterday, and he called out cybersecurity risk as the biggest risk to the economy going forward. And that's the opportunity for kind of the new generation of entrepreneurs. I'd call out a couple areas that we're excited about at Greylock. One is, to Chenxi's point, just cloud security and thinking about kind of hybrid multi-cloud security and what that means. And I really like what she said around the entire pipeline. So from design to, applications and infrastructure running in production. So I think that's one area. The second area is around data security. And I, again, break that both into kind of identification and classification of sensitive data in the kind of heterogeneous IT environments, and also the access governance piece, right? And monitoring access. So that's the second. The third is around shift left. So as companies all become software companies and developer productivity becomes more important, security responsibility is to shift earlier and more towards the design phase. And so there's opportunity and tooling that's going to support that. And then the last piece is around identity. And when I say identity, I mean that both in terms of like, core authentication authorization on SaaS, IaaS, PaaS, but also around monitoring and anomaly identification around different identity patterns. I think that's going to be really important as well.
Fantastic. Well, I'm afraid all too quickly, the time has flown by and we've reached the end. So as I said, we're going to stay for a few minutes longer to answer questions. The screen showing should have each of our email addresses as well if you want to get in touch directly. My thanks to the panelists, Dr. Chenxi Wang, Saam Motamedi, and Dino Boukouris for their time and for sharing their perspectives. Thanks to you in the audience for listening, participating, and a huge thanks to everyone behind the scenes, including our producer, Jenna and her team, Amy Jordan and her colleagues for wrangling all the speakers, and everyone at RSA for putting this fantastic event and many others each year together. Enjoy the rest of your day. Thanks for tuning in. All the best. Goodbye.
Thank you.
Thank you.
Thanks.
Goodbye.